Hey guys, welcome back to the channel. It's me Peeps bringing you another trading breakdown. In today's video, I'm going to walk you through my analysis from this week. What I saw in the market, the trade I took, and most importantly, the lesson we can also learn from it. Let's dive in. Today, I'm only focusing on GBP NZD, that's GBP New Zealand dollar. So that's the only pair I'm focusing on right now because I really have a lot of analysis to make today. So that's why I just have to focus on this particular analysis. Why? Because it is very clean and easy again to understand. Because I just had to bring it up for some people that that really need something like this. You get. So I'll start by appreciating you for subscribing and also liking my channel as well. So let's just dive in straight to the analysis. If you should notice from what you're seeing here, the market is currently in from the 1 hour, it's a ranging market, but from the daily time frame, check it for yourself. From the daily time frame, it's an uptrend market. So what you do is that, like I said already, follow the trend is your friend, follow the trend, and also just stick to your trading plan. You get. So I'll start by going live with the analysis. So last week when I saw this setup, I was just like, me seeing this setup, I think there's no need of me just trading it like that. I need to come on YouTube to come and share this particular trade setup with you guys, but I wasn't really that chance to get to share it on YouTube. So I had to do it this weekend. So I'll start by um, bringing out all those terms, those conferences, those like sorry, my trading conference that I managed to bring together to form an A plus setup. So I started by bringing in my line two. Like since I saw this break of structure down here, you know what? I didn't hesitate. All I did, I mark out this break of structure because, like I said already, market was in an uptrend on the daily time frame, and now you seeing this break of structure from this place. All you need to do is you mark it. Since the market is in an uptrend on the daily time frame, going down to the 1 hour, if you see a break of structure, don't hesitate, you mark it. Like I always say, trade what you see, not what you imagine. Because if you trade what you imagine, at the end of the day, the market might try to play around with your mind. That's why I'm telling you not to trade what you imagine. So I saw the break of structure, and after that, after the break of structure, you mark out your liquidity zone, your liquidity. That is where price will come, tap then no sorry, where price will come, those like the initial highs or low. So from this setup, these are the initial low, and this you call this a trend line liquidity, because these are where the big players will come, sweep, then buy or sell at any point. So in this particular trade setup, why I mark this setup as an A plus setup for me was because if you should check very well, let me zoom in so that you guys will see clearly. If you check very well, you notice from this point that I'm about to draw my POI, what do you see? You see an impulsive candle. Impulsive candle are like candle which are these are high probability candle, whereby there's a high possibility of market coming to that place, filling this gap, filling this fair value gap you are seeing here, which is this place and this place, filling this fair value gap you are seeing here to spike up or down. You get. If it is an uptrend market, it will spike up. That's if you are looking for buys, it will spike up. But if you are looking for a sell, it will spike down. You understand? So I had to come back here, since I want to mark here as my POI. I had to come here. Let me bring out my tool. Let me zoom out. Sorry, let me zoom in so that you understand. How to come with my tool. How to come here. Bring in my to mark my POI. To mark my POI, which was that point. That's where I'm expecting price again to hit, then go to my direction, which was this point. And again, there's these things I always want to, some people to ask me, how did I know that this place is a very good point of interest? Why? Because one, I have a fair value gap, which I've just showed you here. A fair value gap. A fair value gap is also like an imbalance whereby price, big players, are expecting price to reach there, then spike up again or down. So how to come there, fill in that fair value gap. Price had to come there, fill in that fair value gap, then did what again? Price came there, fill in that fair value gap. What was what price did? Let me play it. Price did it, then went up again. Let me replay it. Went up again. And price didn't hesitate. Price didn't hesitate to come to this point. To come to this point. Let me show you. To come to this point. Price didn't hesitate to come to this point. That's where that fair value gap is. Price didn't hesitate. Let me show you. Let me bring out my long tool. So when I noticed there was a fair value gap there and all my confluences were intact, I had to carry my tools and carry my long position to carry my long position to see here. I was actually aiming for 1:2 or 1:3, though at least 1:2 is okay. I was aiming for 1:2 or at least 1:3. So I locked everything. So let's watch as how price played out last week for us. So let's wait patiently. Like I always say, the this game, this forex, the game is all about all about patience. Without patience, you can't dive into it. Some traders, I noticed that. Let me pause this. I noticed that some traders, even when they noticed that there was a very huge break of structure from the external market structure, there was a break of structure down here, up here, and also a fair value gap. Some people still wanted to try and buy the market from here. Some people still wanted to buy the market from here. Think some yeah, they got stopped out. Yeah, they got stopped out. Some people still wanted to buy the market from here. And what happened? They got stopped out. They got stopped out. Why? Because there was already a very high probability setup there. So you now going to go and buy from this minor market structure. I don't think there's any possibility for that. So let's watch out. So like I always say, patience and everything is the key to having a successful trading setup. You need to have patience, and again, always let the market come to your zone. Always let the market come to your zone. You don't force it up. Never chase price. Your age is indiscipline. You need to have that age Need to have that edge. See, price came to that POI, then still swept it down, hit people. A lot of people lost money from there. They lose a lot of money from there. So let's wait. Let's wait. Let's be patient enough. Please be patient. So the price was actually reacting to that zone though. No, price was reacting to that zone. Then tap our POI. See the spike. It was NFP. The spike. Just be patient. And it even gave a confirmation. Yeah, it was a a confirmation empty kind of trade. Gave a confirmation. The change of character down there. Though there was no liquidity. So there was no liquidity. But we have two type of traders, aggressive traders and also traders too that wait for confirmation. So this kind of trade, I took a an aggressive entry. So why? Because I noticed there was all my confluences were intact. So that was why I had to take a an aggressive entry kind of trade. So let's be patient. So I think it has given me 1:1, 1:1, 1:1, 1:2, and boom. Okay, this is 1:3. Yeah, close to, I think, one is to 4 also. So it was the analysis I had last week. And again, like I said, always let the market come to you. Don't trade what you imagine, rather trade what you're saying. You get. So far you've gotten all your confluences intact. You just need to stick to your strategy. And again, if you found this breakdown helpful, don't forget to hit the subscribe button, like, share, and turn on your notification so you don't miss any video. Drop a comment if you want me to break down your favorite pair in the next video. Until next time, stay smart, stay disciplined. Thank you. Hey, Jesus Christ, help me.